Welcome to Quiet Trading. This is not a place for comforting words, and it's not a place that teaches you how to get rich quickly. This channel is about how the market truly operates, about the traps hidden inside support and resistance, and why most traders don't lose because they lack knowledge, but because they place their trust in ideas that feel too familiar. If you're ready to see the market differently, stay with me. This part is for you. You were taught to buy at support and sell at resistance. You draw lines, you mark zones, you trust textbook-perfect patterns. Yet the more you believe, the more you lose. Why? Because you're not the first one to see those levels. You're following the exact same footprints as the crowd, and the market has never shown mercy to the crowd. You think you're trading technical analysis, but in reality, you're willingly stepping into a trap that was built long before you arrived. At support, the place you believe price will bounce, thousands of stop losses are already waiting to be taken. At resistance, the place you expect price to reverse, is often the starting point of the most brutal false breakouts. That's not coincidence, that's design. That's the game. That's the hunting strategy of those who only win when you lose. In today's video, you won't just understand why support and resistance so often become traps. You'll learn how to step out of crowd thinking, how to see the market through the lens of large capital, and most importantly, how to stop being prey. If you're ready, in just a few minutes, everything you believed about trading support and resistance may be completely reversed. I used to be just like you. I believed that if I was patient enough, if I waited for price to reach support, a perfect trade would appear. But after years of paying with real money, I realized one thing. Support and resistance are not safe places. They are like gold-plated cages. The more you trust them, the easier it is for the market to crush you. Sounds extreme? Most retail traders enter around the same obvious price levels, and most of them don't survive long enough to become consistently profitable. Not because they're stupid, but because they think the same way. They're playing a game on a table they don't control, and the harsh truth is this: the market was never designed to pay the crowd. I'm not saying this to scare you. I'm saying it as someone who lost almost everything and then lost it again. I only began to live from trading when I dropped the textbooks, stopped chasing pretty patterns, and started reading the chart like a real player with size. I stopped asking, will price hit support? I started asking, who is trapped here? How many stop losses are sitting around this level? And if I were a whale, what would I do to take all of their money? That was the moment I shifted from prey to observer. I didn't need spectacular winning trades. I needed consistency. No emotion, no panic, no recklessness. And from that point on, trading stopped being a dream. It became something I could live with. And you can do that too. But first, you must break one old belief, that support and resistance are safe places. They are not. They are liquidity zones, and where there is liquidity, that is where whales play. If you want to survive, you must learn to see differently from the crowd. Don't swim with the herd. Learn to swim against the current, to observe, and to strike like a predator. The fact that you're still here, listening up to this point, already says one thing. You're starting to open your eyes. Do you know where hunting is easiest in nature? Not in the most dangerous places, not in the hardest to reach places, but where the prey gathers in the largest numbers. Financial markets work the same way. Where there are the most orders, that's where whales feast. What do retail traders usually do? They draw beautiful support zones. They wait for price to touch support, then buy. They place stop losses just below. They draw clean resistance zones.
They wait for price to hit resistance, then sell. They place stop losses just above. Sounds familiar? You've done it yourself. But you didn't realize you were putting your head right into the shark's mouth. Because when thousands of traders place orders at the same place, the market suddenly gives off a very clear scent. The scent of liquidity. And whales are extremely good at smelling it. They don't care what you think. They don't care how you analyze. They only look at money flow. Your money, the crowd's money. Money neatly packaged into buy limits, sell limits, and stop losses hanging in the air like prey suspended mid-air. Picture it like this. A support zone is like a wide open field. A lot of people gather there, resting, eating, setting up camp. Everything looks safe. And then, boom, a violent push slams down. The crowd panics. No time to react. Price slices straight through support. Fast, hard, clean. Stop losses get wiped out. Retail traders are forced out of the market in pure fear. And the moment you're kicked out, price reverses and shoots back up. You grab your head and say, "How is that possible? It just swept stops and now it runs?" No, the market isn't mocking you. That was a script written in advance. Whales need liquidity to fill large orders. If they want to sell, they need buyers. If they want to buy, they need sellers. And where is the best place to gather enough counterparties? Exactly where you and thousands of others have clustered your orders. Support is not a safe zone. Resistance is not a guaranteed reversal. They are the easiest places to be eaten if you don't understand where you're standing. I've been smashed by the market right at those levels. Not once, not twice, but over and over again. Until I realized one simple truth. The market doesn't need to be right. It only needs you to be wrong. And you will always be wrong if you trade where too many people are thinking exactly like you. Support and resistance aren't the problem. The problem is your expectation of what should happen there. You think it's a safe place. Whales think it's a meat warehouse. That's why where orders concentrate the most is always where traders die the fastest. If you want to survive, don't gather, disappear, hide. Observe the market like a hunter, not like someone volunteering to be sacrificed. And there's something even more dangerous than support and resistance: false breakouts. False breaks are designed to kill your last remaining belief. You know that feeling, don't you? Price breaks resistance, strong green candles, volume surges, everything looks perfect. And that is exactly the moment you need to be the most cautious.
Everything at that moment feels like it's screaming at you. Breakout. Get in. This is the opportunity. You click the mouse. The order fills. Before you even finish a sip of water, price reverses and slams straight down like a punch to the face. Losing trade. Your heart sinks. Your confidence shatters. This story happens every day, on every time frame, to thousands of traders. And here's the most painful part. That false breakout was not random. It was a trap, carefully scripted. Large money doesn't trade only to make profit. They trade to control the crowd's expectations. And there is no better tool for that than a false breakout. Why? Because false breakouts attack belief itself. They make you believe this time you're right, and the moment you commit, that belief is crushed within minutes. You think you're trading a signal. No, you're trading emotion, guided by the very people who created that move. Here's how it plays out. A resistance level breaks. A wave of retail traders jumps in to buy orders. Stop losses are placed just below the breakout. Large money knows this perfectly well, and they only need to do one thing. Push price a little higher, just enough to make you fully believe this is a real breakout. Then, they violently reverse price in the opposite direction. The result? You get stopped out. You feel pain. You feel fear. And afterward, you hesitate to enter again, even when the market actually moves in the direction you originally analyzed. That's why false breakouts are such a powerful psychological weapon. They don't just take your money, they take your confidence. They make you hesitant, slow, and frozen when the next real opportunity appears. And the bitter truth? That false breakout only works because you are predictable. You enter where thousands of others enter. You place your stop where everyone else does, and you are herded like a flock of sheep, exactly as planned. I was one of them. I traded breakouts by the book. Break, buy, stop right below. And I lost again and again, until one day I asked myself, why am I always the one getting killed after every breakout? And I realized something, because I was thinking like a victim, not like the one setting the trap. From that point on, I changed my perspective. I stopped entering on the first break. I waited. I watched how price behaved after the breakout. I watched whether volume was actually sustained, whether the momentum continued, or if it was just a sharp jerk designed to lure people in. I began reading the market like I was watching a stage play. I no longer entered trades just because the candles looked good. I entered when I could see someone getting trapped, and I chose to stand on the other side of that trap. False breakouts are weapons designed to kill the crowd, but if you understand them, you can use them to move against the market. And here's something very few people tell you. Every one of your trades can only be filled if someone else stands on the opposite side. This is the most brutal truth in trading. Large money cannot trade without you, without believers, without FOMO, and without predictable stops placed in obvious locations. You once thought the market was a natural flow. It's not. It's a hunt. And the only real question is, are you the prey or the observer? No, the market is not a natural flow. It is an arena. And in that arena, every winner exists because someone else loses. When large money wants to buy or sell a massive position, they cannot hit the market directly. If they do, price will immediately spike. They need counterparties, they need liquidity, and they find it in your emotional reactions. Picture this. Price just breaks below support, a long red candle. The screen turns ugly. The crowd panics. You see danger. Your hand shakes. You hit sell to escape. You think you're getting out of the market, but the truth is, you just sold at the exact moment whales wanted to buy. You didn't fill your order with the market. You filled it with the very large money that created the drop. The same thing happens on the other side. When price breaks resistance, strong green candles, euphoria everywhere, you jump in to buy thinking you're riding the wave, but in reality, you're buying what they just sold. Whales aren't good because they know the future. They're good because they know how you will react in the present. They know where you're afraid. They know when you FOMO, and they're willing to do whatever it takes to make sure you stand on the opposite side. You think you're analyzing independently. No, you're being guided to become liquidity for someone else. You see a terrible market. They see liquidity flooding in. You see a perfect breakout. They see enough buyers to start unloading. Every time you act on emotion, you stop being a player. You become the missing piece someone needs to finish filling a large position. I was exactly like that. Every time I clicked a trade, I thought I had analyzed carefully, but in reality, I was just a small cog in someone else's plan. I only started making money consistently when I understood this truth. Whales don't exist without a trapped crowd, and I had to stop being part of that crowd. So from today on, every time you're about to enter a trade, ask yourself, am I entering because of strategy or because of emotion? Is this trade becoming liquidity for someone else? If I were a whale, would I want price to appear right here? If the answer is yes, stop. Because in this market, clicking a button doesn't mean you're playing. Very often, you're just prey in a game where the other side already knows every reaction you'll make. If you want to survive, if you want to earn consistently, not by luck, but by skill,
You must stop thinking like a typical trader and start thinking like large money, because this is not a fair market. This is a red ocean, where the strong survive and the weak are consumed. Out there, every emotion you have can be exploited. Large money doesn't enter trades because of a pretty candle. They don't trade because RSI is overbought or oversold. They certainly don't fear missing out, and they certainly don't draw trend lines and pray.
Whales only enter when there is liquidity, when traders are trapped in positions, when crowd psychology weakens and becomes easy to exploit. While you're still nervously waiting for confirmation, whales have already been in the trade for a long time. You see a breakout, but whales are the ones who created it. You believe the market is about to move far. For them, it's enough that you believe. They don't need the market to go anywhere. They only need you to act on your belief. You trade using indicators. They trade your emotional reactions. You use RSI, EMA, candlestick patterns. They use fear, greed, and FOMO as their primary fuel for profit. It sounds ruthless, but it's the truth. And if you don't accept this, you'll always remain on the hunted side. I used to be exactly like that. Technical analysis in every form, candlestick patterns, EMA crossovers, divergences, indicators stacked on indicators, and the result? Losses, psychological pressure, accounts evaporating. I used to think the market was too difficult, but the truth was this: the market wasn't difficult, my thinking was wrong. I thought like the crowd. I did what everyone else did, and I got the same results they did. Only when I changed my mindset did everything begin to change. I stopped asking, will price reach support? I started asking, how many people believe in this support? Who will be trapped if price breaks through? And is large money using this level as a trap? I stopped trading signals. I started trading the logic of large players. I began to look at the chart as a psychological map. I no longer asked, where will price go? I asked, where does everyone think price will go? And when that belief became thick enough, I stood on the opposite side. Do you see? To win, you don't need to know the future. You only need to understand what the crowd believes and act when they are most certain. That's why you must learn to think like a whale, not to become ruthless, but to survive, in a place where the slow get eaten before they even realize they were wrong. If you don't view the market from the other side, you'll always be led by the nose. How long do you want to remain in the role of prey? A month? A year? Or 10 years going in circles inside the same trap? It's time to switch roles. You were taught that support is where price bounces. Resistance is where price struggles to break. It sounds logical, easy to understand, and that's exactly why whales love this concept, because it makes millions of retail traders act the same way. Buy at support, sell at resistance, stop losses just below or just above. Perfect. But perfect for whom? For whales. Because whales don't see support and resistance the way you do. For whales, support and resistance are not reversal points. They are zones where emotions concentrate, where orders compress, where liquidity is the highest. Put plainly, they are psychological battlefields. When price approaches support, buyers start to get excited. Sellers become cautious. But whales don't care whether price will bounce or not. They only care about what the crowd expects. And then they do the opposite. You see price slowly drifting toward support. Candles get smaller. Lower wicks grow longer. You believe a bounce is coming. You buy. You place your stop loss just below the most recent low. And what happens? A violent stab cuts straight through support.
Your stop loss is swept within seconds. Before you even understand what happened, price snaps right back up. Not because you were unlucky, but because you acted exactly like thousands of others, and you were hunted exactly like them. If you were a whale, what would you see? You'd see the crowd buying its support. You'd know their stop losses are sitting right below, and you'd do one very simple thing. You push price down, break support, trigger a wave of stop losses, then buy back all those orders at a cheaper price. After that, you push price upward again. Cheap liquidity, weak hands removed. That is a classic large player tactic. Break to scare, push down to accumulate. For them, support is not a buy zone. Resistance is not a sell zone. They are zones to read psychology and build traps. So if you keep trading the old way, buy when price hits support, play stop loss just below, hope for a bounce, sooner or later you will become liquidity for whales. Remember this, there is no safe zone in the market, only zones where the strong hunt the weak. From this point on, change your mindset. Don't draw support and resistance to catch bottoms or tops. Draw them as a battlefield map, a place where you read what the crowd is thinking and anticipate where whales will strike. The more you think in reverse, the closer you move to the true nature of the market. If you want to survive, if you want consistent profit, not through luck but through a cold mind, if you're tired of getting stopped out every few days, then it's time to use the very zones that once hurt you to hunt the market back. The first step is simple. Stand aside. Watch the first reaction. Don't act immediately when price touches support. Don't rush into a trade when you see resistance. You're no longer the one with shaking hands. You are the observer, the hunter. Price reaches support. The crowd starts buying.
At this moment, you stay out. You're not looking at the chart to find pretty candles. You're looking to read crowd psychology. Is there real buying pressure? Is volume strong enough? Or is it just a weak bounce constructed to keep hope alive? If you see green candles that look decent, but volume is low, there's no continuation, no follow-through. Congratulations, you're standing in front of a nearly completed trap. Step 2. Wait for the stab and watch who gets eliminated. You wait for price to pierce below support. The entire market panics. You remain calm as ice. You don't sell with them. You don't chase the crowd. You observe. How many stop losses get swept? Is the breakdown sustained? Or is it just a liquidity sweep followed by a snapback? If after the stab, price reverses upward and the candle closes above the old support zone, you know it. The trap is set. Liquidity has been fully collected. Step 3. Enter on the pullback, not at the emotional peak. You don't enter at the moment of the stab. You wait for the market to confirm the false break. You enter when everything goes quiet, when the crowd has just been kicked out and no longer has enough capital to jump back in immediately. Your stop loss is not placed right below the swept low. You place it where, if price returns there, your entire thesis is truly wrong. Your take profit is not a dream, not a if only it reaches here. It's a logical zone, a level where large money may begin to distribute or where late entrants start chasing in. From this point on, you no longer chase patterns. You chase the logic of money flow. You read the chart like a battlefield map. Support and resistance are no longer buy or sell zones. They are zones to identify psychological casualties. And from that moment, you begin to think in reverse. You become colder and you begin to win. Not because you're better, but because you're no longer part of the herd. You're not hypnotized by pretty candles. You don't FOMO when price moves fast. You enter when someone else has just been eliminated. You go against the market after it has already fed. I'm not painting dreams of getting rich. I'm showing you how not to be humiliated by the market. If you want sustainable profit, you must be cold. If you want to survive, you must observe. And if you want to move closer to the mindset of large players, you must learn to use traps as weapons, not fear them. Because now you know, whales do not play by your rules. Whales don't trade signals, they create them. The real question is this: how do you recognize the presence of whales before you become the prey? The first sign: volume never lies. When you see price break support, but volume spikes abnormally with no follow-through, that's not retail selling. That's whales accumulating inside the panic. The crowd runs, whales buy. On the other hand, when price rises sharply but volume doesn't confirm, be careful. That is very often a pump designed for distribution. The second sign: price reacts against logic at levels everyone believes in. Price breaks resistance, everyone buys, then reverses. Price breaks support, everyone sells, then snaps back up. These moves are not random, they are scripted. Whales don't guess, they know what the crowd will do, and they always move one step ahead. The third sign: the market kills perfect trades. A textbook pattern, a flawless signal. You enter, price moves just far enough to hit your stop loss, then it reverses and moves exactly in the direction you originally analyzed. That's not bad luck. That's whales sweeping stop-loss zones to secure the best positions when no one else has the courage to join them. You know you're facing large players when the market stops following theory, patterns keep failing, and retail traders begin to lose confidence. That's when, if you're standing on the right side, you enter right after the market has been cleansed. I don't promise you'll win every trade. I don't promise a holy grail, but I can promise one thing. If you understand how whales operate, if you view the market from the opposite side of the crowd, if you enter with patience and discipline, you will no longer be hunted. You will hold the advantage. You've just stepped out of the textbook world and into real combat, where money is real, emotions are real, and mistakes are paid for with real capital. Quiet trading doesn't teach you how to draw lines. We tell you the raw truth of the market, the things few dare to say, the things no course teaches, the things only those who've lost and survived truly understand. If this video brought you value, don't just leave a like, leave a commitment that you will stop being prey, that you will trade with thinking, with strategy, with discipline, not like someone hoping for luck, but like a player cold enough to survive. Subscribe to Quiet Trading so you don't miss the next videos. We don't promise quick riches, but if you were clear-headed enough to listen all the way to this point, you've already begun to grow wealth in the most sustainable and intelligent way. I'll see you in the next video, a place where we don't just learn how to survive, but how to go all the way to the end of the game.